All these rejections from the middle Bollinger Band.
Resistance we're going to need.
If you actually see here, we get
And we'll look for a healthy higher
I
low.
would not
Don't have
be
the
eager
pullback
to
across
enter
the
a long
structure.
trade.
Hey everyone, going to just do a quick check-in here because I got a whole bunch of stuff to do. WEED is what I'm going to cover, and the sector is very likely to bounce together with WEED. And we're getting ready for a really nice bounce opportunity, and everybody that has cash is salivating at this point because of this dump that we've seen, where we are from the high of 3 days ago, 4 trading days later, the low of today, we dropped 25.4% in WEED. So what happened today? Why did we get so extreme to the downside? I think there's a number of factors. It was the perfect storm. Number one, bearish reaction to earnings. Number two, the psychology after the vote. Everybody that was smart money getting in before the vote on bull breaks. Everybody that was dumb money and reacting to the news of the vote getting in late. And we ran multiple days after that news came out. So after 3 days, who's going to be left buying at that point? And the answer is no one, so we dump. So that was the perfect storm number two. And the third point was market weakness, S&P 500. And at this point, if you are trading these Canadian MJ names and not watching the S&P 500, you're doing something wrong. You need to be watching the S&P 500. The correlations have only strengthened over the last few months that I have been observing. And again, I'm watching literally every single day, 5-minute and 2-minute time frames, tick for tick. And I do believe that it's because of the prominence that we're seeing in terms of dollar volume on the U.S. exchanges as well. Even without, the CGC ticker, I do believe there would be some correlation, but I think that factor strengthens the correlation to the U.S. market. And we're also seeing dollar volume start to creep up a little bit to catch up to where we are on WEED. So it's still not in the same ballpark just yet, but it is shifting a little bit. So all those three things have led to a more significant pullback than I would be anticipating. And I've been playing both directions the past 2 weeks, and it's been great for volatility, and it's gone really well. And today was the toughest day out of the last 2 weeks. And the reason for that is the pullback. Look at the 15-minute time frame. So we played the bounce this morning and nailed that bounce. It went really well. And we would look for a 15-minute higher low to form. And it started just fine for the first 15 or the first 3 to 4 candlesticks. Then it started to get more extreme, and increasing bear volume showed up. It was very healthy on declining bear volume. As soon as we started to shift to increasing bear volume, I still certainly expected a higher low. If you go back in time, I'm not going to do it because I don't have the time. 2, 4, 6, 8, 10, 12, 14. I assume that you're going to be very hard pressed to find a time that we had 14 red 15-minute candlesticks in a row. So normally you would absolutely anticipate a higher low to form and a lower high and a tightening range at worst case scenario after a bounce of this magnitude. And I would say 90% of the time that's going to happen. And this is one of those scenarios where it didn't happen. And the reason for that, in my opinion, look at the high here. 10:30, 10:45, we hit the high of the bounce. Look at SPY. 10:30, we hit the high. It's nothing but a pullback the rest of the day. I looked at SPY on the hourly time frame when I was just doing a video for someone, and I thought, wow, I would have absolutely expected an hourly higher low to form there to form a tightening range in equilibrium. We dropped right down to lower lows. That's exactly what happened here with WEED. And if you were watching the market bounce attempt on WEED at the end of the day when we got this huge flush and big time dump down to the lows, 15-minute RSI under 20, 5-minute RSI under 20, hourly RSI in the mid-20s, and the 4-hour RSI hitting oversold, this bounce was stifled at the end of the day due to SPY weakness yet again. You could see it. SPY would get a clear bear break on the 5-minute time frame, and all momentum would get sucked out of this bounce attempt. So we are looking for a bounce tomorrow. I currently have a position that I am in, and I am going to be looking to go in heavy tomorrow if we continue to the downside, with the one factor being the S&P 500 that could extend this weakness even more to the downside. So that's where we need to be cautious, watching the S&P 500. But the 4-hour time frame at this point is on the verge of oversold. We've dumped 25.4% in 4 trading days. So the hourly RSI is also right down at oversold. 15-minute RSI has been oversold for a long time. So the bottom line is, with another leg down, I'm very comfortable entering positions here, and I'm going to be doing so in multiple different accounts, including my IRA account. And when the bottom is hit, we will look for a very easy conservative 10% bounce. And I do expect it to be more than that, but that's my conservative number. So we're going to test the low of today first thing tomorrow. If it holds, that's a potential catalyst for bulls to maybe cause some shorts to have to cover. And if we get bull buying and shorts covering at the same time, then we can see a significant bounce. If we break to a lower low, I'm going to be looking to scale into positions with these RSI levels so extreme. So I'm going to be staggering down in a bunch of different accounts, these different orders, and we're either going to get, in my opinion, a flush or a hold of support and a bounce. And I would expect a flush is more likely, but again, the S&P 500 here is the wild card. If the S&P 500 dumps as we close near the low of the day, and we're close to a break of support, and we're not oversold on any time frames here, the 4-hour just above oversold, the hourly is not close to oversold yet. So if we do see further weakness in SPY, we could see these RSI levels in WEED reach extremes. We need to have that thought going into the day because, again, it happened today. We hit more extremes and things that do not happen often because of the S&P 500, in my opinion, along with those other points as to the weakness. So I think it's a really great opportunity. This is the kind of setup where I'm, reaching out to people that don't actively trade and they know what they're doing enough to where they could, potentially enter positions here. But I am going to be looking at this as an opportunity because, again, if someone told you 4 days ago you could get WEED under $37, you'd say, heck yeah. But now everything's scary. And I'm getting messages too. We look for capitulation. I'm getting messages of people scared about their long-term positions. So again, you reach a point where fear maxes out, and that's when the bounce is its most powerful and most significant. So we'll see if we get it tomorrow. It's not a guarantee. I would say probably an 85% chance we get this bounce going tomorrow. Keep in mind that the hourly time frame is going to form a lower high when we bounce. Anything under 40.47 will be a lower high. So unless it's a huge bounce and a 10% move right away, I'm expecting a lower high on the hourly, and we'll need an hourly higher low and higher high for the bounce to have meaningful follow through. So that's what I'm keeping an eye on. If we do not get the bounce today, it'll be tomorrow I should say, it'll be an even better opportunity on Friday. So keep protective positions because you always want to have cash to capitalize on these opportunities. And we'll see what tomorrow brings. Have a good night. Best of luck out there. Go get them.